Hi guys, my name is Elban P. Bilio from BSIT Mechanical Technology, Section D. And anyway, we are the third reporter of business management. And anyway, our topic is all about financial management. Financial management may be defined as the area or function in an organization which is concerned with profitability, expenses, cash, and credit so that the organization may have the means to carry. So, from the word of financial management, we don't need to go beyond. Kasi nandyan na sa pangalan pa lang, financial management. It is concerned with profitability, kakayahang kumita, expenses, paano gumastos, cash, and credit. So, in financial management, there are three broadcast of the three areas that the one with the most job opportunities. Itong sinasabing three areas, ito yung different three levels of management. First is the administrative managerial or a top level of management. The second is the executive or a middle level of management. And the third is the supervisory operative as lower level of management. Then the first is the top level management. The top level management are your CEO, such your executives as a CEO, CFO, president and vice president. These top managers are responsible for setting the overall direction of a company and make sure the major organizational objectives are achieved. For example, mayroon kayong isang goal o mayroon kayong kailangan gawin na up to date talaga o kailangan nandyan yung presidente or yung vice president para ma-achieve kasi sila yung kumbaga sila yung pinakaulo ng inyong ginagawa for example sa inyong company o sa isang organization. And the next is the middle management. A middle management is the intermediate management level or a hierarchical organization that is subordinate. Pag sinabing subordinate, ito yung nasasakupan to the executive management and responsible for team leading. And the line managers and or specialist line managers are the middle management. Middle management is indirectly responsible for junior staff performance and productivity. Next is the lower level management. Consists of foremen and supervisors who look after the operative workers. Pag sinabi nating foremen and supervisors, siguro naman familiar na to. Lalo na sa mga construction company, nandyan yan, yung mga foremen. Sila yung tumitingin sa trabaho ng kanilang mga skilled workers. For example, yung carpenter, yung laborer, yan, yung mga and the supervisors, kagaya na lamang ng isang kumpanya dito sa isang hotel dito sa Calbayog City. Mayroon dun mga supervisors yung tumitingin sa kanilang mga tao kung tama ba ang kanilang mga ginagawa. And ensure that the work is carried out properly and on time. Thus, they have the primary responsibility for the actual production of goods and services in the organization. And the next is in financial management is important in all types of businesses, including banks and other financial institutions, as well as industrial retail firms, of course. Kasi pag financial management nga, pinaka-importante ito lalong-lalo na sa mga nagbi-business. Kasi nga financial management nga para kumbaga ito yung nagpapatakbo ng negosyo mo, financial management. The next is financial management is also important in the government operations from school to hospitals and highway departments. And the job opportunities in financial management range from making decisions regarding plant expansions to choosing what types of securities to issue when financial expansion. And the last is financial managers also have the responsibility for deciding credit terms under which customers may buy. Of course, managers pa rin na magde-decide para sa mga customer. In terms of under which customers may buy. And much inventory the firm should carry, how much cash to keep on hand. Wherever to apply the firm's manager analysis and how much of the firm's earnings to flow back into the businesses versus put as dividends. And that's all. Thank you.
Magandang araw, sir. Ito po yung aking report about financial management analysis. Financial management analysis is the process of analyzing a company financial statement for decision-making purposes. Kumbaga, ito ay tumatalakay sa mga tanong kung paano nakakuha ng pera ang isang individual, kumpanya, gobyerno, tinatawag na kapital sa konteksto ng isang negosyo at kung paano nila ginugugol o namumuhunan ang perang iyon. Type of financial statement. Company shows the balance sheet, income statement, and cash flow statement to manage the operation of their businesses and also to provide transparency to their stakeholder. All their statements are connected and create different views of a company's activities and performance. First is the balance sheet. Balance sheet is a report of company financial worth in terms of book value. It is broken into their part to include a company assets, liabilities, and shareholders' equity, short-term assets such as cash and account receivable can tell a lot about a company's operational efficiency. Liabilities include the company expenses, arrangement and debt capital. Its paying of the shareholder equity includes detail on equity capital, investment, and return earned from periodic net income. The balance sheet must balance assets and liabilities to equal shareholder equity. This figure is considered a company book value and serves as an important performance metric that increase or decrease with the financial activities of a company. Number 2. Income statement. Income statement breaks down the revenue a company earns against the expenses involved in its business to provide a bottom line, meaning the net profit or loss. The income statement is broken into their parts which help to analyze businesses efficiency at 3 different points. It begins with revenue and the direct cost associated with revenue to identify gross profit, and then moves to operating profit, which subtract indirect expenses such as marketing cost, general cost, and depreciation. Finally, after deducting the interest and taxes, the net income is reached. And the third is cash flow statement. Cash flow statement provide an overview of the company's cash flows from operating activities, investing activities, and financing activities. Net income is carried over the cash flow statement where it is included as the top line item for operating activities. Like its title, investing activities include cash flows involved with firm-wide investment. The financing activities section include cash flow from both debt and equity financing. The bottom line show how much cash a company has available. And the last one is the free cash flow and other valuation statement. Companies and analysis also use a free cash flow statement and other valuation statement to analyze the value of company. Free cash flow statement arrive at net present value by discounting the free cash flow account company is estimated to generate over time. Private companies may keep a evaluation statement as the progress toward potentially going public.
Financial performance. Financial statements are maintained by companies daily and used internally for business management in general. Both internal and external stakeholders and the same corporated finance methodologies for maintaining business activity and evaluating overall financial performance. When doing comprehensive financial statement analysis and analyze they typically use multiple layers of data to facilitate horizontal analysis. Each financial statement is also analysis with vertical analysis to understand how different categories of statement are influencing result. Finally, ratio analysis can be used to isolate some performance metrics each which statement and also bring together data points across statements collectively. Below is a breakdown of some of the most common ratio metrics: balance sheet, assets to turnover, quick ratio, receivable turnover, and debt to equity income to statement, gross profit margin, operating profit margin, net profit margin, tax ratio, efficiency, and interest coverage.
In India are facing serious financial problem as they are not following uniform pricing policy. Number 5, problem of surplus. In the in the financial field, another problem is that declaring surpluses. From surplus, we mean that resources available as surplus after deducting working expenses, normal replacement interest, payment, and dividend. But again, in the public sectors, undertaking it has not been found possible
to devise a policy declaring surplus, non-clear-cut principles and regard have been laid down by government for guidance of public sector's undertakings. Number 6. Problem of raising loans. All public sector's undertakings are run with the finance of the government. Now, this has in turn to raise of many problems. Sometimes government may be feel difficult to finance public sector undertakings such as cases. If these undertakings depends on capital market, they bound and disturb financial structures of the market. Number 7. Problem of budgeting. Still another problem is that of budgeting. It is in the most of the public sector's undertakings have no serious budgeting system. The budgeting are of course prepared, but this is primary with a view of obtaining funds from the government. The budgeting estimates are kept every high providing for margin for cuts, and when cuts are not made, to extent to which is this have been incorporate estimate budget, the whole exercise becomes unrealistic. That is why usually there is wide difference between estimated budgeting and actual expenditure. Not only in this, but there is another problem, namely that in public undertakings in India, expenditure is not linked with the performance and target achieved. Number 8. Problem of delegation of authority. It is seen that usually there is no delegation authority in the public sectors undertaking, with the result that prior concurrence of the competent authority is to be obtained for incurring some expenditure. This is a result of overloading a person with work and we have heavy commit and many mistake as well. Number 9. Internal audit. Accounts of very public sector's undertakings are regularly audited. The main purpose of such as audit is the main financial irregularities are brought to light so that there is not committed again and again. But in the field of finance, internal auditors create many problems. Instead of smoothing everything that they try to create a complication and bundles. And in many cases, internal audit proves more difficult in not to crack that external or outside audit than the external or outside audit which is done by authority statutory authorities. Nakalawas. Number 10. Role and responsibilities of financial advisor. Whether is the public or private sector's undertaking is not. Number 10. Role and responsibilities of financial advisor. Whether it is a public or private sector's undertaking is not most desirable that their finance should be properly checked and controlled. In a public sector undertaking, such as officer is said to be responsible for creating many problems. He does not consider himself part of the whole management system. He feels that his sole responsibility is to observe financial rules without caring for the difficulties which is their observance will create. He does not feel himself part of the whole system but thinks himself outside the system, which is bound to result in a many serious problem of complication. Number 11. problem in inventory holdings. In all public sectors, undertakings inventory holding is very high. It has been estimated that one of the whole in a public sector's undertaking inventory holding is far higher than even the working capital. In some undertakings, inventory is more than 2 years production, with the result that course of refuse are held up for nothing sake, such as inventory obviously influence and oversell capital output ratio. Number 12. Problem of calling reports. One more problem which is public sector's undertakings quite often face in that of submitting reports to the administrative ministry. Each of ministry calls for too many reports, both from financial as well as administrative management. Attention of financial management is diverted to this statement. This becomes irritating because administrative machinery does not put use to reports for which this is called for. Number 13. Problem of performance. Whether a financial management is working successfully or not, that should be linked with the performance. Similarly, financial management should also be judged by the economies which has infected without prejudicing efficiency or hospitality of workers. But again, financial management is faced with many problems. It is, of course, criticized everywhere, but so far that there are no means of methods which is performance as be tested. Number 14. Disinvestment policy of government. As a part of privatization of a government has been following by policy of disinvestment, where the public sector undertakings are slowly becoming private. In fact, a ministry is there to look after this investment in the public sectors. In this trend continues, except many public sector undertakings may become private in the days to come, and new problems and creeps in such as organization. That's all for problem financial management.
Hello sir, good day. I am Christian Pagunasan, reporter of K-Concept. The K-Concept of Financial Management are budgeting, reporting, cash flow management, tax planning, and budgeting. One of the most important concepts of financial management is budgeting. Spending money without a plan or without regard to your sales can lead to overspending, missed bill payments, and decreased profits. Create a master budget each year for your business that includes income and expense projections, a cash flow statement, a balance sheet, and a profit and loss statement. Perform a budget variance analysis each month or quarter to determine if your budget projections were accurate or if they need to be adjusted. Reporting to make the most effective decisions regarding marketing, distribution strategies, pricing, hiring, and other aspects of your business. You'll need accurate information regarding how each decision you make might affect your bottom line. Accurate and regular financial reporting helps you know exactly where you stand financially, how different areas of your company and different initiatives are performing, and what your resources are. A balance sheet lets you see your company assets and liabilities at any time. Cash flow reports tell you if you can pay your bills on time or if your collections process is inefficient. Knowing your available credit and what your interest costs are provide important information about your purchasing power and profit. Cash flow management. A common reason small business struggle or fail in poor cash flow management. Even when income is greater than expense, you still might find yourself short of cash and unable to pay bills if you don't time the receipt of your sales invoice with the due date of your bills. Accurate and timely cash flow statements help you avoid production shutdowns, loss of customers, and damage to your credit. Without proper planning, you will pay more taxes than you need to arrest fines, penalties, and liens. Effective tax planning can help you reduce payroll taxes, lower your income tax liabilities, avoid paying sales taxes late, and avoid surprise that arise when you are hit with tax bills larger than you expected. Work with a tax expert to minimize your tax liabilities and meet your obligations on time. The more debt you carry, the more interest you pay, raising your overhead costs and lowering your profits. Even if you have no problem paying your credit card bills or loan amount, high debt can lower your credit score, potentially decrease your abilities to get more credit when you need it, and raise the interest rates you'll have to pay on future borrowing. Effective financial planning includes monitoring your debt and managing it in your regular student. Understand the difference between value and price and its role and impact in the business decisions we take in our day-to-day lives. It also helps us create value and understand the future effect of value today. That's all. Thank you.
So let's continue to the principle of financial management. So I have 5 principles of financial management. First is organize your finance. Second is spend less than you earn. Third is put your money to work. Then third is fourth is limit debt to income producing assets. 5 is continuously educate yourself. So first is organize your finance. So organize your finance, this is pagmamanage ng isang pamamaraan sa kung paano hawakan ng pera para gagamitin sa paggastos. Hindi yung gagastos ka lang ng gagastos kung anong gusto mo. Kailangan alam mo rin kung paano ito gagamitin sa tamang paraan para hindi ka malugi sa pagninegosyo, kasi ito yung pinaka-importanting pamamaraan para maisagawa mo at ma-successful mo ang isang business mo. Hindi yung bumibili ka lang ng wala sa negosyo mo or hindi kasama sa negosyo mo. Then the second is spend less than you earn. So kailangan pag gumastos ka ng ganitong item, kailangan mas malaki din ang kita mo kaysa sa ginastos mo. For example, bumili ka ng isang item sa isang store, pag nag pag nagbenta ka nito, kailangan kumita ka rin, hindi yung mas malulugi ka. Kasi yun ang business kasi. Kailangan kumita ka, hindi yung malulugi ka. Okay lang na konti yung kita, basta at least may kita ka. Then the third is put your money to work. So ito is pag mayroon kang sabihin na lang natin, pag mayroon kang gastusin, halimbawa pag bibili ka ng car para sa negosyo mo, so kailangan kumuha ka ng pera dun sa business mo, hindi yung sa sarili mong pera, sa sarili mong bulsa, kasi hindi mo masasabi kung successful ka na kung kumukuha ka pa rin ng pera sa bulsa mo para lang dagdag dun sa pamuhunan sa trabaho, sa business mo. Okay lang kung sa umpisa, okay lang yun kung mamuhunan ka sa umpisa, kukuha ka ng pera sa bulsa mo, idagdag mo dun, okay lang yun, kasi umpisa pa naman. Kasi kung matagal na, kailangan dun ka na kumuha ng pera mo na gagastusin mo, dun ka na kumuha ng pera mo sa business mo or sa trabaho mo, dun ka na kumuha ng pera para sa gagastusin na gagamitin mo. Halimbawa kung yun nga, bibili ka ng car, kailangan dun ka na kumuha. And the third is limit debt income reducing to the asset. So when we say the asset, so asset is ito ay pwede mong pagkakitaan. Halimbawa kung bibili ka ng lupa, as in lupa lang talaga, lupa, nagkakalaga yan ng sabihin na lang natin example 1 million. Lupa 1 hectares lang, sabihin natin 1 hectares 1 million. So yung lupa is wala pa talaga, lupa lang talaga. So pag yan pinatayuan mo, sabihin na natin pinatayuan mo ng apartment, or sabihin natin hotel, so kailangan, halimbawa gumastos natin, sabihin natin gumastos ka ng 2 million para sa pagpatayo ng hotel na yan, or 3 million. So pag pinaupahan mo na yan, so mas malaki na ang tutubuin mo kaysa sa gastos mo at nabili mo dyan, kasi continue na yan sa pagkikita mo ng income. So the fifth is continuously educate yourself. So kailangan hindi ka pabaya sa sarili mo, kailangan masigasig ka pa rin para sa negosyo mo. Stay positive. Kung ano man yung mga negative feedback, kailangan labanan mo yan para sa negosyo, at para kailangan sabihin na lang natin stay positive lang para hindi mawala yung pagka-confidence mo. Confidence is the first for your business. Kailangan hindi mawala yan, patuloy lang dapat yan, kasi yan ang importante. Kailangan confident tayo para sa sarili, kasi tayo lang yung nakakaalam kung anong dapat natin gawin, diba? So that's all my report. Thank you.